Well, good evening. This is the January 25th, 2022 meeting of the Retirement Board. This is Jim Lavin, the outgoing chairman from previous years. And I want to announce that the meeting has a quorum. So at this point in time, I'm going to turn it over to somebody else that has probably the proper authority, which I probably don't have as a former member. So the first order of business should be selecting a new chairman. So perhaps you've talked about that, and naturally a secretary.
Yeah, looking at the agenda, I think the first order of business is to introduce our new board member, Eric Paulson.
Hi, everyone. I'm just going to take the cue there. Eric Paulson, lived in Trumbull for about 20 years, former town council member, and I'm a professional trader and portfolio manager, self-employed. I'm happy to work with the pension board. I've loved seeing over the past 5 years or so the funding going up consistently. And I'm looking forward to getting my hands dirty with this stuff.
Welcome.
Thank you.
So I guess, Jim, you think you're no longer officially on the board? Is that true, or is?
Well, I think it was true last year too.
I know that you were interested in leaving, but I don't think that you've
well,
actually.
what happens is you don't thank God Eric is here, because you can't leave until you're succeeded. So I was kind of like trapped in a sense.
Yeah, so I would suggest that you continue to run things as chair, and that we elect officers for the coming year, and then whoever your successor is can take over. That would be my suggestion.
Okay, and I agree with that. And if I may take the lead here, I would like to, as the first order or second order of business now, is put out the fact that we need to elect a new chairman of the Town of Trent Pension Board. Very important position in my view. So if the members are ready, I'd like to hear nominations from the floor.
I would like to nominate Patrick Clark.
Second.
And there's a second. Okay. It's been nominated that Patrick Clark be the chairman. Is there any discussion on that item?
Or any other?
Hearing none.
Just a quick question.
Go
To be
ahead.
chairman, there's a few things as far as, I'm not that well versed in there's certain rules about how meetings are. So I might be a little clunky around that as far as.
Don't worry, we'll correct you.
So,
And you can always call me.
Yeah, I'm
Available.
going to use it as a sounding board, and I'm kind of apolitical as to how these things kind of work and the intricacies of that. Now, outside of just running the meetings themselves, there's a meeting before the letter has to be presented to the town council. Is that correct?
Yeah, I can give you a 25-cent rundown. Right now, there's a couple things you want to make sure you do. You're going to draft a letter that goes to the first selectman that will go to the town council. I guess the first selectman sends it to the town council. That's usually done in the spring, probably March. You get a lot of help from Phyllis and Maria on that information. They basically write it because they have the data.
Yes.
And that's the first thing. A couple other important things that I used to pay attention to was the investment policy. That should be looked at periodically and updated as is appropriate. And then the various reports, you got to rely on Byrne to keep you on track for schedules on various reports. I didn't find it too complicated, and Maria and Phyllis were always very helpful in calling to your attention issues that needed to be done. Once in a while, there's a little problem that pops up in the administration of the plan, but usually those things are ironed out pretty easily. And when you give the report to the town council, I didn't have any problems they treated me pretty fairly. I would give them the report. I would, do most of the talking, ask if there's any questions, and most of the time there were no questions. So it went through pretty smoothly. So let me stop here. See, Patrick, I don't want to take up all the meeting time here. You can call me offline and I'll be happy to chat with you.
Sure. I just,
anytime.
it's, as far as some of those other details, I was kind of aware of them, but how they happened and what was.
You know what
needed.
I could,
We could help you through it.
Okay,
yeah.
that's
And
fine.
what I could do is I'll get, Maria certainly is very experienced, as is Phyllis. And I could maybe go through my own notes and just maybe draft a couple bullets, and I'll send it off to you just as a reminder for this or that I came across. And the big thing too is the actuarial reports.
Which is
that was
year too, correct? It's this year.
I think so. That's
Yeah.
always a big thing.
It's July 1st, 2022.
Right.
Yeah.
Yep.
And usually the discussion of the pension rates and,
Right.
what the town of Trumbull is willing to continue to make up every year. And Maria knows all about the budget cycle.
Okay, then I'll accept. Again, just be aware that if the meeting may not be as smooth as you had run them, Jim. You did an extraordinary job. You were extraordinarily gracious,
Well-
and I think the most enjoyable thing about being a member of this board is just your effort to always bring consensus to these meetings, and I think that's something that I feel is really important going forward, because this is for the good of the town and the people that whose funds we are stewards of, and so hopefully I can carry your mantle on going forward. But
Well, thank you.
you were
but
very
I-
welcoming to me, and Eric, I hope to be welcoming to you. And so I accept to be chair.
Well, wait a minute. Did we
Nope.
vote on you yet?
Yeah, we
Oh,
got to vote
geez.
first. You're not.
Yeah,
Sorry, oh no.
So after
That would be
discussion, yeah, and making sure that since it's being recorded and may help Phyllis with the minutes, is there a motion to accept? A motion was made to accept Patrick as chairman. We had a discussion. Let's have the vote now. All in favor?
Aye.
Opposed? Abstained? I think Patrick probably abstained. And so it sounds unanimous.
I can't oppose myself. Okay, great,
So
thank
now,
you.
Mr. Chairman, I am, if you will permit me, I'll just finish with the secretary because that's the final piece of and so we need a nomination for somebody who will be secretary to the board.
And what is the
And-
secretary's duties?
That's a
Well-
fair question and not much, I think.
And who is the current secretary? Is that the other Jim?
That's me. That was me.
That was Patrick.
Yeah,
So you know Patrick.
it was very little, if anything.
Yeah.
So,
I
Probably
think you just
reviewing
step in.
minutes.
You
yeah,
step in.
step in
Chair is
and
not there.
I would kind of, again, viewing the secretary as just, again, as someone who could step in, but also as a sounding board to kind of just talk through some
Right.
things, maybe post-meeting or something along, do we want to just have another, we're going to elaborate on at a certain point, or if there's help, preparing something in a document, I don't see other than that, what the role and responsibility would be.
Well, I would be happy to volunteer for that position if you guys
I
want.
second.
That didn't take.
Okay, there's a discussion here. Jim has been nominated and second to be secretary of the board. And any further discussion? I think a vote, all in favor, aye.
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 Opposed? Sounds unanimous to me. Congratulations, Jim.
Okay.
And I will now turn the meeting over to Chairman Patrick and just be a kibitzer as a public citizen.
Oh, good
Thank-
luck, Jim. Thank you
Thank
for all
you.
your service.
Good luck.
Oh, you're welcome. You too, Donna.
Thank you.
And congrats again on your new position leading the Stanford.
Yeah, I'm working myself out of a job, so.
I
Well,
have
you
a
can-
feeling they're not going to let you go.
Yeah, it's going to be another 2-year extension after that.
They don't know how old I really am.
So I think the next point on our agenda is to hear the investment update from Byrne for the fourth quarter, and hopefully some enlightenment on the recent market activity. For those who have been following, it has been a very interesting several weeks or past 2 days, which have been very interesting. So I'll turn it over
on the year end, right?
Yes. Yeah, let's focus on the year, which was looked very good. So I'll hand it off to John and Lindsay.
Yeah, thanks everyone. Happy New Year, right? So it's certainly been an interesting paradigm shift, at least in the short term, right? From a pretty strong market ending the year and then going into January, and the pickup not only in volatility, but concerned around a lot of things, interest rates, what the Fed's going to do, et cetera. So I'm going to share my screen and I'm going to touch base a little bit at year end, but then I'll get a little more topically into kind of what we've seen year to date, and then talk about some of the things we've done in the portfolio leading up to the end of the year that we've talked about. And then Lindsay will speak a little bit about the portfolio and then going into some of the investment things. So I have a couple charts here I'll share, which, periodically we do, but I just thought they were topical. So can everyone see this okay, or is this a little small? I can make this bigger. Let me just.
Yep.
Looks fine. We can see it.
Okay, great. All right, so I'll just touch base briefly on this page because this really has changed quite dramatically, right, from the end of the year till year to date. But one of the things we've talked about for a long time at the meetings, right, is this outperformance of growth over value, and really mainly the technology sector specifically versus the value stocks, which are, when we get into value, it's predominantly financials, right, that make up the majority of both these indices. So, if we look here at the last 3 months and we go back, 1 year, and the most dramatic is if we go back 5 years or 10 years, we can see this outperformance is pretty dramatic. And when we think about investing just purely from an academic point of view, value stocks over time should outperform growth stocks. But, that's not really the case here, right? So we've seen a 10-year phenomenon where we've seen a pretty dramatic outperformance of growth or really technology over the rest of the market, but even specifically its counterpart to value. So one of the things over the last month, we kind of talked about the last meeting, we are starting to see somewhat of some cyclical changes within the market. And what we've seen from this last month here, which, a month doesn't mean anything in terms of data, but when we see this last month and then going into this year, you can see that the value index has just started to outperform growth. And if we take that forward as of the close today, growth is down about 13.5% in the Russell 1000 index. So net, it looks like it's about down 11% if we take this last month of the year, roughly. And then if we add value into that, value is down about 3.5%. So, the disparity between growth, if we take, if we take December and this month, value's up, and if we take growth, it's down. So, we've seen that across the board pretty dramatically in the technology sector specifically. And then, where else have we talked about that we were seeing pretty negative outlook out of was emerging markets, specifically China. From a big macro point of view, as investors, we want to when we have capital, we want to put it in places where it's being treated the best. And historically, when countries become more and more communist, foreign investors don't do very well when they invest there. I can't think of any country or historical investment proposition where foreign investors on average invested in a country that was becoming more and more communist, that it's done well. And so we see that kind of in China with the biggest component of emerging markets, China, representing over a third of the index. And, traditionally in the past, they've operated kind of as a two-party system, free market economy, sort of on one side, and then politics with the CCP on the other, certainly that's converging. And that's really creating a lot of the negative sentiment out of emerging markets. Just touching briefly on the Barclays Aggregate on this page, you can see this is one of the changes we made as well in the portfolio last quarter, reducing some of kind of the total bond market exposure and going into more credit that had less interest rate sensitivity to it. So, that will have shown to work out in the portfolio. But generally, we're going to enter an environment here where it looks to us, and I think most investors on average, that interest rates are going up and probably going up for the foreseeable future. So that creates a big concern when you're holding assets that are sensitive to interest rates, much like investment grade corporates or government bonds are pretty sensitive. So I'm just going to show two slides here, which I think are interesting to look at. They're from two different firms. One firm, just parenthetically, it's GMO. They're a very value-oriented firm. They've been right. The CEO or the former head of the firm, Jeremy Grantham, he's been, the guru of predicting bubbles, so to speak. So it's been claimed. But with that being said, I'll also say this 7-year asset forecast has been wrong for the last 10 years plus. But the big point I'm showing this is when we look at a firm that's investing based on value metrics, it's interesting, and these are real returns. So you could add, they have a 2.2% inflation. So if we divide or multiply that in, we can get up to the number. So these numbers will be slightly higher on a non-real basis or a nominal basis. So when we look at this, the reason I just show this picture is because this is someone who is pretty respected, has a lot of assets under management in the business. This isn't advocating for his firm by any means, but the why I show this picture, and this will kind of tie into the other picture I show, this is a scary proposition for any investor, especially pension funds, if he's even 50% right about these returns. So, when we think about being a US pension fund and an investor, the majority of our assets tend to be in US stocks and US bonds. So when I look at that picture between the small and large, you're looking at negative annualized returns. And then you're looking at bonds at negative annualized returns. That doesn't mean, for stocks have a tremendous amount of volatility, or they have a big standard deviation around them. So they can have a much different rhyme or reason to them. But certainly the bond market has a much more narrow band around their kind of standard deviation. So, the reason I show this is it looks to us and kind of what the majority of market, forecasters or purveyors say, we're going to have much lower returns going forward. And it's going to be very hard when we think about, a traditional portfolio of, say, stocks and bonds only to meet any type of actuarial return, let alone, some type of asset mix that outperforms that return. So that's one page I'll just show briefly. And then as we look here, I thought it was interesting because there's a lot of comparisons about this environment in the late 2000s. So I thought this was a good chart from JP Morgan to look at and just to see kind of different valuation metrics around just the S&P. Now remember, the S&P has gotten much more growth weighted and growth heavy, being that really the top 10 stocks in the S&P, probably 8 of them are technology, or maybe 7 of them are technology, with Apple, Facebook, et cetera. So when we look at valuations, we can see some similar characteristics. The valuation as a P ratio is much lower than it was in 2000. But when we look at dividend yield, if we looked at just a dividend yield on what we're paying to get stocks, very similar. And the different thing in the environment is the 10-year treasury. So that's much lower. So, what that would suggest that as we have a lower, I wouldn't call the 10-year risk-free, but if we use that as our risk-free rate when we're discounting back to the present value, I would say that, as moves start to come up in the 10-year treasury, and that's the 10-year treasury, as it already has, starts to tick up, clearly we're going to have to discount assets to the present value to a lower valuation. So, that becomes another concern when we do this purely from kind of a discounted cash flow or discounted earnings type point of view. So, the main point I'm looking at these two slides is, there's not only concerns around bonds, but there's certainly starting to be more and more kind of yellow and red flashing lights around equities, and we've seen that. I would have, if we were here 2.5 weeks ago, it would have been good timing to show this. Now it's kind of, I'm showing this after these markets have sold off. But when we look at the sell-off in the markets, you get pretty big sell-offs like this when you're at high valuations. So clearly we're seeing that, and it's going to remain to be seen if this is going to create a price floor here for another leg higher, or we're going to see a leg down as interest rates come up and there's concerns around inflation and slower growth. I think the big concern for us in our investment committee, as we look at kind of the market overall, are we going into an environment where we have inflation on inputs? So, the things we're buying like gas, food, et cetera. And then we're getting deflation across, asset prices or stocks. And then you get interest rates starting to move up with inflation. So, an environment that looks much more like the 70s, which is an environment that, we haven't seen obviously in a very long time, where we had stocks going down and bonds going down. I mean, we're certainly having that for the first little part of the year here. But if that creates a consistent trend, we're going to have to really be dynamic about where we're putting capital. And in those environments, traditionally, it's been things that are much more geared towards inflation that perform well. So in that environment, it was mining stocks, precious metals, real estate, et cetera, things of that nature, more real assets. So, the concern for us is, do we have an environment with very low returns for stocks going forward and possibly negative returns and then negative returns for bonds? But, with that all being said, I'll pause before I jump into the portfolio, because that's, a little bit of the storm clouds we're seeing on the horizons. But as we end the year here, at the end of December, it was a very good year.
Yeah, do you have any thoughts on where you can hide out?
Yeah, I think we started some of it, Jim, with some of the real estate, like we're doing with the other Boyd fund. I think is a good start to what we're doing. I think we're going to want to be in, as we already shifted into some more, if we're in credit, some more credit sensitive vehicles and high quality, higher yielding but quality credits. And then, I think the biggest concern right now is around, slow growth Europe. The biggest place, traditionally where you've gotten a bit more protection are in the kind of blue chip, large cap stocks. Although, when I say that, it's kind of, I look at the peak to trough of pick a company like Johnson & Johnson during the 08-09 financial crisis. Yeah, it was a defensive stock relative to, the S&P went down peak to trough 67%, and Johnson & Johnson, something like that, went down 55%. So, did it provide protection? Yeah, but, no one loves saying, hey, we did a good job and we were down 55%. So, I think if we continue to this sell-off, I think the best thing to do would be to move some of the portfolio. If this continues, we're not at this point yet. If this continues, we're going to have to, shift some of the equity exposure to some shorter term treasuries, especially in an environment where if you get these interest rate hikes and you're still getting a float up of the 10-year, we're certainly not going to want to be in moderate to longer duration bonds. So we're going to probably want to be in short duration treasuries and corporates, and then also reduce the overall aggregate equity exposure.
Would you move more into value? I know we do have value exposure, but if this is indeed a shift from growth to value, would you consider shifting, some of the S&P fund, the index fund, into a value mutual fund or value ETF?
Yeah, we would look at that. I think one of the things we're looking at right now that we talked about today is that the the underlying characteristics, the supply and demand characteristics of the market and the sell-off, I talked about this a lot, the small into the mid cap and then into the large caps. Now we're seeing it. Right now, there's nothing that's telling us to, hey, if you have cash on the sidelines, put it back in. But it's also, this supply demand or shorter term trading signals aren't saying, get as cautious as you can yet. So there's kind of twofold. I mean, there's been such a big sell-off in call it the NASDAQ or the Russell 1000 growth that, the question is, does that provide some opportunity? I mean, underlying the major companies, I mean, there's companies that across the board are down 50+% in this underlying index, and a lot of them in major companies. So, there may be more of an opportunity if we do get a rally back here in some of those kind of more growth companies, that we could either look at a manager to add into the portfolio. But we do have more of a value kind of tilt on the portfolio. But yeah, I mean, I think you'd probably do better in this environment, being that the growth side so high in price. You'd be better in probably dividend, cash flow generating stocks. So yeah, I mean, if we continued this, I think the shift would probably be much more like in 2000s, would be more into like the value side of the equation than the growth. If you got a downside, I mean, we're going to have some component of the portfolio in stocks, and probably the best place to be will be in the large stocks. And then at this time, you're probably more of the dividend paying and cash flow generating defensive stocks, which tend to be more value. And then if we look at, we're missing about 6-ish% of the pricing. Portfolio up for the year 12.7%. And then I'll just look, I think we're close to the highest valuation on the portfolio, but I'll turn it over to Lindsay unless anyone has any specific questions for me to go through, macro valuation or kind of, sentiment. I mean, it's interesting today, for just a big company, one of the biggest companies in the S&P, right? So, Microsoft came out with pretty darn good earnings and the stock sold off a pretty aggressive amount. So, that appears to us that there might be certainly some concern and maybe some more downside to go on this sell-off.
Thank you. So I'll review the different sectors of the portfolio, but we're happy to discuss any of the specific investments in detail if you would like us to. As of December 31st, the portfolio value was $50.9 million. For the 3-month time period, so the last quarter of 2021, the portfolio was up 4.42%, and for the year it was up 12.7%. The equities equated to 64.9% of the overall portfolio, which was $33 million of the $50.9 million. The equities were up 6.52% for the 3-month time period and up 18.84% for the 1-year time period. Within the equity space, the domestic equities were 48.6% of the overall portfolio with a market value of $24.7 million. The domestic equities were up 9.36% for the 3-month time period, so fourth quarter of 2021, and up 26.7% for the 1-year time period. Scroll to the next page. The international equities were 16.3% of the overall portfolio, which equated to $8.3 million. Those were down 0.22% for the 3-month time period and up 3.25% for the 1-year time period. Fixed income was 20.87% of the overall portfolio, which was $10.6 million of the portfolio. Those were up 0.04 for the 3-month time period and down 0.34 for the 1-year time period. Inflation protected as well as alternatives were 8.55% of the overall portfolio, which is $4.3 million of the portfolio. That was up 0.98 for the 3-month time period and up 7.3 for the 1-year time period. And then we had $2.8 million in cash, which is about 5.68% of the overall portfolio. Any questions on any of those?
Yeah, and the cash, we've raised a little bit out of, we talked about last meeting, out of the international markets. So we've held that, one, to fund the Boyd thing, but, as we started to see kind of some deterioration across, emerging markets, remember we sold out of one of the funds there. So it's been, although it kind of dragged us a little bit down towards the end of the year, it's certainly been a good buffer, going into, January. So, just generally, we're okay with where the portfolio is. And if we were going to make a dramatic change here, it'd be, like I said, we would want to reduce the equity exposure overall. But, we do have a bit of value in the portfolio. So, the S&P is down, I don't know, roughly 8.5%, I believe, for the year. I haven't seen what it closed down today, but roughly that. And then I think some of the value stuff we have in the AQR portfolios are kind of starting to perform, whether they had been lagging, being that they're much more, value, price to book type stuff weighted and quantitatively weighted towards value. So, we're getting the upside of that we haven't gotten from them in a while.
Yeah, I was just looking at the Value Index ETF. We've got IWD. It's down through today 3.9%,
Right.
versus S&P down 8.5%. So it's quite a difference.
Yeah, and then I haven't checked the AQR funds, but I would imagine they're probably pretty similar, I would think. I didn't actually look at that. Let me just see.
Yeah, like QCELX is basically unchanged on the year to date.
Yeah.
Oh, no, sorry. No, I was looking at 1 year down
Yeah.
6.8.
Yeah, so getting a bit of the outperformance there. I mean, not much. It's like, as I said, no one likes to, the relative return. Oh, sorry. I didn't realize I stopped sharing my screen. Yeah, so getting some relative outperformance, but the negative returns no one likes. So we'll continue to look here and see if this starts to deteriorate more. The underlying market looks, going into kind of this week, there was 40% ish of the market was down 20% or more. And then something like 20% of the market was down 40%. So the underlying things that we talked about, although the market's not down that magnitude, the underlying ingredients of the market, or the underlying stocks that are smaller and more sensitive, are down pretty significantly. So, as I mentioned, traditionally what you see at the end of a bull market run, you see tremendous concentration in the large stocks. So, if we don't start to see a broadening out and more of a rally back, I mean, that's going to be more of an indicator to get the portfolio, under target in equities.
Mr. Chairman, may I ask a question?
Go ahead.
That's how we would do it in
Eric?
town council. We'd have to go through the chair. Through the chair, I would like to ask you to expand on the alternative and inflation protected securities. What are those? I did speak with Mr. Meisner regarding some of those, and understand some of them are government REITs and stuff like that. But if you could go into a little bit more detail, I'd appreciate it, as well as if we were to allocate more money to that sector, what would you be looking at beyond those funds? Thank you.
Yeah, so the Boyd Watterson, the two funds are real estate funds. They Boyd Watterson's the largest, actually the largest manager of government real estate in the United States. They didn't start as that. They started as a long only bond manager, but as they were looking at alternatives to bonds, they started building out in the space. So the GSA fund are properties that are predominantly 90+% leased out to areas of the federal government. So think DEA, FBI, DOJ. They're in Homeland Security. They're in pretty much all the areas of the government that they view as growing, as opposed to something, although that may change, or something that has to be on site, as opposed to something that's going more digital, like the IRS is looking to go more and more digital. So the investment thesis there, since we invested, was really around a shift from investment grade long only fixed income and concerns around interest rate rising. So there was a swap there between full faith and credit of the US government. So we're not really worried about like the tenant sending the check in the mail, right? As you have areas of the government leasing. And then beyond that, there's inflation adjustment equivalents built into the rent. So if we got into an environment where inflation did, or interest rates ticked up, we weren't going to be penalized in those vehicles. And then the state fund is really a deviation off of them building out this government fund for the federal government. And they looked around states, and state governments have really critical buildings that they need to have, whether it's medical, et cetera. So, that's really a deviation off of the GSA fund. So it doesn't have, the same type of credit, full faith and credit, as the government. But, these are buildings we're buying, call it 90 to 95 cents on the dollar, that we're buying into and getting the cash flows from the leases from different areas of state and federal government. The Longford 2 and 3 funds are both litigation finance funds. So, these are lawsuits that are meretricious lawsuits. They're not ambulance chasing suits or anything by that means, but what they invest in are things that have quantifiable damages with essentially Fortune 500 companies for the most part. So something where there's a quantifiable damage from a patent infringement, trade infringement, something like that. And then they help fund the lawsuit for the plaintiff for a significant portion of the settlement or potential settlement. And then beyond that, kind of in the third fund, they have a bit of workings with major law firms across cases, and also major academic institutes across patents and things like that. So an example would be a client had, I believe off the top of my head, an LED patent. I believe it was the University of California, Santa Barbara. Someone stole the patent from them, and then started monetizing the sale of the product using the patent. So there's a lawsuit around that. So both things to kind of remove us from, to remove us from the traditional fixed income and equity like broad exposure. So let me pause there and see if that helped answer
Yes.
questions.
Thank you. That was very thorough and detailed, and I had no idea that a litigation fund like that existed. That's interesting.
Yeah, it was an early thing. We've been early in the asset class. There's more and more. There's been a big proliferation of funds now. Longford was kind of one of the early funds in the space. There's a very senior partner at a Chicago law firm who saw this. He actually had some clients bring these opportunities to him. Initially, he's like, there's nothing that exists. And then this was something that started actually in Australia, moved more to the UK, and then it's become more and more prevalent. And it's kind of the way the fund is structured. It's a private equity structure, meaning they call capital down as they're ready for cases. We get all our investment called capital back. We get all our management fees back. And then should there be, gains in the fund, and then we split profits 80-20 with the fund at the end of the life cycle. So very much similar to a private equity structured fund, I would say.
Interesting. All right. And the other question I had was, it really is down the road, so we can skip it for the time being. But thank you for your reply. I appreciate it.
Okay, and we do have another fund we're adding from Boyd, which is a mission critical fund. So we're adding a little bit of capital there to just expand the real estate exposure. So very similar to the state and government funds. It's a mission critical fund. So an example would be, think of a company who works with the Department of Defense. One of the examples, they're looking at a building that's leased by Raytheon. Raytheon has, an example, a 10-year government contract. They have to work in this building to work with the Department of Defense. The building's not owned by the government, so there's opportunities for them to build out and have this fund for mission critical things, cybersecurity, et cetera. So that's one of the other kind of funds we're looking at, or we approve for a bit of capital.
Great. Thank you.
You're welcome.
Are there any other questions?
Thanks, guys. I would just say, if it's okay with everyone, we'll make sure that we're being very proactive to reach out. So should things really continue to deteriorate, and we need to hop on a call to
Actually,
potentially.
Would it be possible maybe for you to send out, I know we don't have such a short-term focus, but I'd be curious to see a monthly report after this month,
Yeah, we can generate that, no problem.
just to see how we're doing.
Yeah, we can get that. That's pretty easy. We can run that internally in the system pretty easily.
That would be helpful. Thank you.
Thanks, everyone.
Okay, thank you.
If that's it, then thank you, John, Lindsay. And we'll look forward to hearing from you again in the near future. So thanks very much.
Thank you. Have a good evening.
Congratulations, everyone, on the new positions.
Thank you.
We'll see you go, Jim.
Hi, John.
So the next order of business is the approval of pension benefits, which is in the agenda for Sandra Mangia Capra. How's that for pronouncing? Hopefully I got that right. Any questions, discussion?
Just my usual question. This has been obviously checked to make sure this is the correct amount that we're dispersing.
Yes, it's been reviewed.
All right, anything else? If there's no other discussion, if someone can have a motion, propose a motion to approve the pension benefits.
I'll make a motion to approve the pension benefits.
Thank you, Donna. Second?
Second.
Thanks, Jim.
Second,
Motion to approve the pension benefits as detailed. All in favor?
Aye.
Aye. Opposed? And abstained? And that motion carries. The next item on the agenda is the investment policy update, which I know that we review on an annual basis, and I believe we try to do that at the beginning of the year. I don't know if the board has had a chance to look at the investment policy in any detail in anticipation of the meeting.
Well, I did look at it, and we made a change at our last special meeting, I believe, to what we call inflation.
Correct.
And, inflation protection and alternatives. And what I'm seeing, actually, because I hadn't really looked at this lately, is on page 4, we have two things: liquid alternatives and illiquid alternatives at 10% each, which does add up to 20. I guess illiquid alternatives would be something like the Longford Fund, which is very illiquid. I would classify the Boyd Watterson funds, which are quarterly liquidity, as liquid, even though they're not daily. But not sure that the 10% cap on the liquid alternatives is exactly what Byrne needs in order to move us, to have flexibility to put more into this category rather than traditional fixed income.
Do we consider, possibly just changing that category to match what Byrne has on their, their quarterly agendas, which is to call it inflation protection and alternatives, and do the 0 to 20% that we had agreed to at the last meeting?
Yeah, I think that's what I would recommend too.
So that's one thought, to make that change to the investment policy. One other minor, we say fixed income, again, within their materials, it's credit. Maybe we change that to credit.
Fixed
Again,
income and credit, I think.
Okay.
Because some of the things we have in there
are
basically fixed income.
Yeah.
Barclays Ag type stuff.
So we'll change that to fixed income and credit, and then we'll change liquid and alternatives and illiquid alternatives to just the one category of inflation protection, and alternatives with the min weight of 0, the target weight, I think, of 0, and the max weight of 20, which I believe is what matches the Byrne's materials. The benchmark index, Jim, any sense of what we should be benchmarking that against? I know it's more your specialty, so
Well,
I don't know if CPI is appropriate.
For inflation protection, that certainly is appropriate.
Okay, so we can keep that as is then.
Yeah, it's basically something that's always presumably going to be positive, so it suggests more conservative investments that hopefully beat inflation but aren't equity oriented. So I think that that's appropriate to leave it the way it is. But I would maybe, since we're at about a 10% weight now, maybe we could set the target weight to 10, and then maybe adjust the fixed income target weight to reflect where we are, which is what? Fixed income right now is at 21. So we could, I guess that's set to be at the midpoint between the lower and upper. Is that how it's done? Between the 20 and 15, not exactly. That would be.
No. We're at the much lower end of the fixed income range. And I can't imagine us being even anywhere close to the target weight anytime soon. So
we're currently at 65% equities. So we're at up there.
I'm looking at the fixed income and the credit side of the.
Yeah, and then down at fixed income, we're at 21. And cash is currently 6 or something like that. And then inflation protection and alternatives is 8.5. But I see 65 is overall domestic, is overall equities. Domestic equities is actually at 49. And international is at 16. Yeah, just if we raise the target on inflation protection, everything for target, I think, should add up to 100, right?
Yes.
Yeah.
So you could do like 20, 50, 20, and 10. It'd be nice and simple, I guess. They're not really constrained to hit the target exactly, but just to come up with something that's roughly in line with where we are now. And
so what are the changes?
So I guess it would have to be a motion for all these things, but what I'm suggesting is, basically what Patrick just said on the, combine alternatives into this one inflation protection alts category. with 0 to 20 range and a target of 10, and then keep the other ranges the same, but set the targets to 20% fixed income, 50% domestic equities, or it could be 55. I'm just saying 50, 20 international equities, and 10 for inflation protection. But that's just a suggestion.
I think that sounds good to me. I think we haven't really had a target on the previous liquid, illiquid, and we've certainly been building in that category. So I think to put a kind of a flag here, we're at 10%, we're going to be at 10% soon. And I think it's an area that we've been, building emphasis in. So I think establishing that 10% target, I think, makes sense to articulate that especially within the investment policy statement, because it really what drives the pension plan strategy. And Byrne has to refer to that. So I think that makes sense.
All right. Well, in that case, I would like to make a motion to make those changes to the target allocation table.
Can I just
Yeah.
review them? Can I just review them again? So fixed income / credit, the target will be 20%. Domestic equities will be 50%. And the liquid and illiquid alternatives, we're going to change that to inflation protection, and the target will be 10%.
And then international equities would have a target of 20.
20%.
Yeah, inflation protection and alternatives, Maria?
It's 10% target.
10%, yes.
0 to 20 with a 10% target.
Yeah.
So
Yeah.
that would be my motion.
Okay,
Do we have a second?
I second.
Discussion? Any more discussion?
Makes
All
a
in
lot of-
favor?
Makes a lot of sense to me.
Mhm.
Aye.
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 Opposed? And abstain? That motion carries. Any other discussion around the statement? I mean, that was when I was reviewing, that was my one issue to kind of bring those targets and those categories in line with what we've been doing, for the past several years, and particularly on the inflation protected and the alternative side. So I don't think there's any, I don't feel there's any need to make any other changes to the investment policy statement at this time. So if we're all set, we'll move on to the next order of business, which is the annual first selectman's letter, which citizen James Lavin, I see that there is a sketch of last year's letter. My question to you, Jim, is this is obviously based on last year's information, last year's letter. Is this something that I should craft and then maybe bring to the table next meeting, or should I just do the changes and then send it out to the board for review?
Mute it. Jim. Jim, you're muted.
Here we go.
Thank you, Maria. Yeah, it was actually something I just would update from year to year and give it to Maria and Phyllis, and they would put in the data. As I went through my notes during the course of the year, I would see if there's anything significant. For example, this year, you'll mention that there's a change of the guard, you're the chairman, and stuff like that. And then, of course, you may want to talk a little bit about the upcoming actuarial reports and things like that. But I would just take last year's template and update it, and with anything that's new, throw it in and make it real simple for the first selectman.
But does it end on December 31st, as far as that's so? my appointment as chair is a 2022 event, not a 2021 event. So is it
Well, you
is it really specific to that calendar year?
We are
It
reporting,
was.
yeah, it's
It
reporting
was.
as a 2021. And
Okay.
Patrick, I could fill out the numbers and I could
Okay.
circulate it back to the board.
That would be fine, if you could do that. Like, I quickly looking at this, the past few days, I know like we're going to be doing the biennial the valuation. That was 20, I think we reviewed it last year.
2020,
So,
believe it or not.
yeah,
Yeah, we're up for a new valuation this July 2022.
right.
So on that second schedule, you will not have anything for July of 2021,
Okay.
obviously. And the first part on the same page for the pension investments, basically I'll fill the information from Burns reports.
Okay.
Yeah.
So I guess if you could do that, then I could possibly, I'll look at the letter,
Yep.
make some changes, and I could circulate it to the board. Does that sound
Yep.
reasonable?
Yep.
And then we'll go
It
from,
would be nice if we got it out a little more timely. I think it was late the last couple of years, so maybe try to get that out in the next couple of weeks or so, if it's possible.
Well,
So
I don't know if you have to have a meeting to vote on it. Or do we need just a virtual meeting or a email meeting or something? I don't know if that's a
Email, yeah, people could just
legal.
by email, I think.
is it possible I can just prepare the letter, send it out, and then take comments, and then see that as make the changes, and then go ahead and submit the letter. That way we don't have to go through another meeting and
Yeah. I'll double
again,
check with Cindy.
if it has to be done, I'm not sure about that, but I'd probably prefer just to kind of circulate it, take input, and then make any changes, and then maybe just do one more final go around, and then if we're all good, then I can go ahead and submit the letter. If that sounds good.
Yeah.
So according to Phyllis, it says it goes to a full board and you vote on it. We vote on it. And then it goes out. So I don't know. So we're meeting now.
So April will be the next meeting.
But you can also, I think, either call a special meeting by Zoom.
Yeah. We could
Okay.
call a special meeting.
All right.
You'll have
So,
To approve this.
All right, then we'll
Work on the letter. We'll
Fine.
forward it to you, Patrick, and we'll get comments from people and then we'll go from there.
That sounds good. And that way we can have a brief meeting, vote on it, and then we'll adjourn as quickly as possible.
Yep.
So I'll go ahead and take care of that. Again, looking with the idea of going back, focusing on 2021 events. And I was just kind of scanning the agendas and the notes from last year to see if there was something, again, that was specific or important that I think was a relatively quiet year. I know within this letter, I think we said we had, adjusted the rate of return last year to 7.25. So I think that was one of the major points that we had made. So I'll go ahead and work on that letter and then get that out as, hopefully in a timely fashion. Okay.
Yep.
So if we're all set on,
Mr. Chairman,
yes,
just a
Anthony.
reminder to everybody that any email correspondence between all the board members is public information. So if there's anything, just when you're writing things down, keep that in mind.
so keep it clean is what you're saying. Okay. All right. So if we're all set with that, we'll move on to the next, which is the approval of minutes. And we had the regular board meeting on October 26th, and then we had the special meeting to discuss the investment in the new Boyd Watterson Fund, which we had back in December. And I believe, Jim, you and I had gone through those notes and made some tweaks and changes. And so I want to make sure that the board has an opportunity to take a look at the notes from the December meeting, but also the October 26th meeting. So if you want to take a few moments to look at it, or then we can have some discussion around it.
Yeah, maybe are we just approving them one at a time?
Yeah,
Start with the
let's
October.
take a look at the October 26th meeting first. So if there's any changes to any of the wording.
I move that we accept the minutes from October 26th.
I just had a few changes. Just looking at that, that last bullet, Mr. Byrne indicated that he is disappointed with the quantitative exposure in the AQR portfolio in the emerging market. I thought maybe indicated he is disappointed with the performance of the AQR Emerging Market Fund. It represents less than 1% of the portfolio, and we reduced exposure once before.
Right, so that went on to say that we moved to remove it entirely.
Yes, and just looking at that next line, he suggested eliminating from the portfolio and putting it into the Vanguard index. I think we have to just make sure the Vanguard is one word, VANGUARD, and into the emerging markets ETF. I believe that's where it was allocated to.
Yeah.
Keeping the exposure at 4.5.
Yeah, excuse me, Patrick.
Yes.
Patrick, excuse me. You're going to have to go really slow on those
I'm
changes.
sorry.
'Cause I can't
Sorry.
catch them that quickly.
So far,
Sorry.
the only change
I
is
don't do sure.
Vanguard is basically misspelled. It should be one word. You see that on the last bullet there, last line? Vanguard should not be two words. Page 1.
Yeah,
Last.
I got that for her.
Okay.
Okay.
That was the only change, right, Patrick?
Yeah, I think just that we make sure that it's clear where it was going into the reallocating to the.
Oh, another
Vanguard.
typo type thing. It says it is represent. It should just say it represents less than. It's just a typo type thing.
And did you want to change that he is disappointed with the performance, not the quantitative exposure? Is that what you wanted to do?
Yeah, I mean, I think he was really just disappointed in the performance of the fund. I mean, the
Okay.
quantitative exposure, I think it was more just the performance of the.
Yeah,
The
but
AQR.
AQR employs a quantitative approach.
Yeah.
So that was what he was referring to.
Okay.
So I don't know if you really need to change that.
Okay.
Well, since we're changing it, I mean, yeah.
Okay, well, he obviously was disappointed with the overall performance as well. So just
Yeah.
he's disappointed with the performance of the AQR emerging, might you say AQR emerging markets portfolio. Let's see, where is it? Oh, I don't have it in front of me anymore.
Any other changes?
So I will withdraw my previous motion and move to accept the minutes as revised.
Second. No.
Okay. Motion to approve the October 26 minutes. All in favor?
Hi.
Aye.
Aye. Opposed? Does
have to-
anyone need to abstain?
Yes, I have to
Eric, you have to
abstain.
abstain because you
Correct.
were not here.
Was I there both meetings? I think I might have missed one.
Donna, you were there for October 26th. Maria, you were there. I think we were all
Yeah.
here. Yep. So we're good. Eric abstained. Okay. And now to review the minutes from the special board meeting from December 1st. We have a chance to look at and review those minutes.
Yeah, the only comment I would have is on the motion where it says Mr. Meisner moved, Mr. Clark seconded, to move 2 million to diversify government REIT. And it's a technicality, but what we're doing is committing 2 million. And that money then will be called, because this is a new fund, it's calling capital as they need it. And we anticipated that they would call the full 2 million this month, but it wasn't moved right away. We just made a commitment of 2 million to that fund. So I don't know if it's necessary to change it for that, but just
So you want to say to move instead say to commit 2 million to the diversified?
yeah, I think that would be technically a little more accurate,
Mm. Okay.
since we won't move the money until the capital calls come in.
Any other changes?
As Patrick said, we both actually went over these minutes before, and we so they have been looked over pretty carefully.
Any other changes or comments, discussion? Do we have a motion to approve the minutes from December 1st?
I move to accept the minutes as revised.
Second,
Second.
And let's vote. Motion to approve. All in favor?
aye.
Aye.
Opposed? And abstain? Eric?
Yep.
And again, we were all there for the December meeting. And if there's any other business, I think again, I'll once Maria, Phyllis, once we work on that letter, I'll make sure to do that again in a timely fashion, circulate, take some comments, we can do some changes, and then if we're good, we can then have a very brief special board meeting to approve that, so we can make sure we get that out in a timely fashion. If there is any other business.
Yeah, we're real quick. Mr. Chairman, congratulations.
Thank you.
I clicked the link. I was here as a visitor, I guess, for the first half of the meeting while Bernie was presenting. And then I only got invited in as a participant after that. So just wanted to make clear that, I did vote for our new chairman and secretary as well.
Okay.
For whatever that's worth. But
Yeah,
Okay.
Anthony,
anyway, I
gotcha.
guess I clicked on the wrong Zoom link. So I came in as a watcher instead of a participant.
That's why you weren't there.
So I think we're all set. If there's any other business, we can vote to adjourn, and the time is 8:12 according to my phone. And so next thing, again, look out for the letter from me. Jim Lavin, I will be probably calling you maybe every other day just to see what lunch you're having down in Stamford, but also to say just to get your advice and your knowledge and your wisdom. So
Happy to chat.
again, your service is greatly appreciated.
Thank you again.
Without a
Thank
doubt.
you,
So-
Jim.
Yeah.
Okay, Maria.
thank
And
you.
thanks again for the trust and faith the board has in me. And again, watch out for that email. So motion to adjourn the meeting.
Second,
So moved.
All right. Thanks, everybody. Stay
Good night.
well.
take
Night,
care.
everyone.
Bye, everybody.
Talk
See you
soon.
later. Good
Bye-bye.
luck, Eric.
Thank you.
Bye-bye.
Bye.